I'm going to go over some of the most common misconceptions about mortgage rates and teach you how to make sure you get the best deal. I'm going to talk about a few things today related to mortgage rates, so if you're interested in buying a house, I hope this video is helpful. If you're excited about this topic, please leave us a like, and don't forget to subscribe to our channel, so that you don't miss out on any of our content. Let's get started. When it comes to home loans, the rate you'll pay may depend more on your lender than your actual loan rate. Lenders will often charge a lender's fee, points, and other extra costs that they know you'll pay. It's called a point of service. The more you're willing to pay for a mortgage, the more they'll charge you. If you're looking to get a mortgage soon, January is a great time to shop. Lenders are competing for your business. If you're interested in what the mortgage rates in 2022 will be, predictions on what could happen to interest rates, you've come to the right place. What is a mortgage rate? A mortgage rate is the interest rate you'll pay if you use the money from your mortgage to finance your home. It's often expressed as a percentage per year. For example, a 5% mortgage rate would mean you have to pay 5% of the money borrowed each year. Unlike a car loan, where you shop around and find the best rate, a mortgage rate is set by the lender. Every year, lenders compete to get your business. They do this by marketing their mortgages to consumers like you, through advertising and other channels. How mortgage rates are calculated. The interest rate you'll pay on a mortgage is based on a number of factors. One of them is the interest rate that banks and other financial institutions are willing to lend money to consumers like you. When you go to complete your mortgage application, a bank will look at your credit score and other financial information to determine what rate they will charge. Predicting mortgage rates in 2022. Given that mortgage rates are set by the federal government, it's hard to predict exactly what they'll be in 2022. But it's certainly possible to make some educated guesses. What we can do is look back and see what happened in the past when mortgage rates were at similar levels as they are now. Can mortgage rates be changed? The short answer is yes, but it's not something that most homeowners will ever want to do. There are a few reasons for this. First, it's complicated. Getting it wrong can have huge consequences for your finances. Second, if you go through the trouble of getting a mortgage on the house you own at a higher rate, you might as well stay put. Doing so gives you more security, pays no extra fees, and lets you take advantage of mortgage interest rate discounts on future loans. Third, if you want to take your chances and try to negotiate a lower interest rate, you can always do that. But it's not something most people would want to do for their mortgage. What really influences mortgage rates? Like any other financial decision, the answer to this question is complicated. There are lots of factors that influence mortgage rates, but the two that come up most often are Federal Reserve policy and the economy. The Federal Reserve affects mortgage rates through two main channels. The first is interest rate policy. The Fed controls the federal funds rate, which has a significant effect on the rates that banks and other institutions can charge for loans. The second is the amount of money that banks are willing to make available to consumers like you as a mortgage. Conclusion. Ultimately, the best advice we can give when it comes to predicting mortgage rates in 2022 is to shop around. When interest rates are low, as they are now, there are bound to be a lot of mortgage offers on the table from a lot of different lenders. Don't settle for the first offer that comes in the mail. Shop around online as well as in person. Compare rates and terms, loan amount, fees, etc., and make sure you're getting the best deal possible. The best time to get a mortgage is in January. Because of this, you'll have a lot of competition from lenders trying to get your business. Make sure you're comfortable with the rate you're being offered. If you're not, shop around some more. There are bound to be other lenders that are more lenient on their requirements. And if you're not happy with the rate you're being offered, it's probably best to stick with what you got until at least midsummer. As always, thanks for watching our video. Don't forget to like and subscribe if you haven't already, and bye until the next video.